Deven Choksey, Managing Director of Choksey Securitues, also joins us live. Deven, good morning. Thank you for joining us. Deven, the ability of this market to shrug off bad news is quite amazing. Fundamentally, nothing has changed. Economic headlines are still poor, but we've come a long way from the recent low.
Good morning, Nikunj. Well, I think typical character of this particular market, as we have been witnessing, is largely because of, I think, resilience, I think, which we are seeing in this market is largely because of the policy changes which are coming in, and probably I think that's where I think the market is taking cues. We have been seeing the RBI policy as a major supporter for the market, I think, in last 2 months. And as the governor of RBI stated in his last policy review as well, that he would probably reverse the MSF rate cycle, I think, in between before the review as well, which he actually did yesterday. So such kind of policy measures which comes in for promoting the growth or the liquidity into the system, as a result of which I think the markets are showing a good amount of resilience. Also understand one thing very clearly, that there is a good amount of appetite for investment into the market. Most of the people on the street, they're talking about that this is a time now to accumulate investment portfolio, and that's where I think many of them have been, I think, looking at the opportunities at lower levels. I would think that given such kind of nature of the market and given the appetite, also given the fact that the currency is stabilized and I think likely to remain in this range for some time, my reading says that I think you will probably find more amount of inflow of money coming in from even FII side and also from the domestic side. So obviously I think the Nifty stays in a range between 5750 to 6050. Any meaningful breakout above 6050 technically could lead and get to the newer levels. But as of now we believe that I think this 300-point range for the Nifty would be more meaningful to watch for.
Deven, the underlying argument for IT has been the rupee will remain weak and US economy will recover. But looking at the kind of macro setup we are staring at, US economic recovery will get delayed because of the shutdown, and rupee also has smartly appreciated against the dollar. So despite a non-conducive macro environment, what explains the strength in rupee, in IT?
Well, I think it's a good question, Nikunj. I think most of the funds, I think, whom we speak to, and plus I think the customers also, they do not want to part with IT, more because of the confidence not existing elsewhere in the market. Moment I think you see the confidence coming up with the other space, I think other sectors in the market, probably you might see some amount of weight shedding happening in IT space. Like what we saw in FMCG earlier, I think some amount of possibilities can be ruled out, I think, for the IT space as a whole. I do agree that I think fundamentally things don't change beyond a point. Of course, in this quarter, as we see it, I think in most of the frontline IT companies, you are likely to see the benefit of the depreciated rupee largely coming into them. And that could probably, I think, surprise the bottom line numbers in many of the companies, including HCL Tech, I think, beyond our calculations. So to a greater extent, I think that is the story. But yes, you are right. I think going forward, the fundamentals don't change beyond a point. Right now, I think the more of a strategy right now is to, I think, keep the defensive in the portfolio as much as possible till the time you see the certainty emerging into the market. And that's where I think investors are holding the IT stocks in the portfolio. In fact, some of the mid-size IT companies or mid-cap IT companies which are looking fundamentally good and growing at around 20-25% rate of growth, I think there could be even better opportunity going forward because they are available at a valuation which is far more discount to the frontline IT companies. So I think there one could probably see a re-rating possibility in many of the counters.
Deven, would you be a buyer in Apollo Tyres? It looks like the Kumar Tire and Apollo Tyre deal has hit some kind of a wall. The stock had cracked completely the minute Apollo announced acquisition plans of Kumar Tire.
Well, I think I would call it a blessings in disguise for the shareholders of Apollo Tyres, minority shareholders of Apollo Tyres particularly. This deal could have been, I think, quite a costly deal for Apollo had they gone into this particular deal. And luckily, I think as we see it, I think it has entered into a rough patch or a rough weather at this point of time. Given that the possibility of, I think, this deal falling apart, I think one probably may want to buy the stock. Maybe I think from trading perspective it can re-rate or a little bit I think improve. But the fact that I think the promoters have shown such kind of appetite to acquire such a large company, going forward also I think this trade could come out very easily, and that could disturb the rhythm of investors when they hold such stocks in the portfolio. So from investment perspective I would say that I think stay away from this particular company till the point of time the philosophy of the management goes clear as to how they want to grow the company. If they want to grow exponentially, the manner in which they have probably I think shown the intent at this point of time, certainly I think it's not calling for space in the adding into the portfolio rather.
Deven, what's the sense that you're getting of about IT this time around, in particular Infy? Does it seem like it's going to turn out to be as big a positive surprise as it were the last quarter?
Well, on one side, I think if we leave aside the bottom line improvement due to the rupee depreciation and the resultant benefit that they are getting, most of the IT companies getting because of their currency, natural I think advantage of the currency. You leave that particular aspect aside because that is certainly going to show up the performance of the bottom line for many of the companies. But if we typically look at I think the top line for most of the companies, they would say in a range of around 10 to 12% upside I think compared to last year in many of the cases, including case of Infosys. Infosys too I think probably showing a good amount of what you call traction for taking over some of the projects which earlier they were not probably getting it because of the change in the model. They went back to their particular old model I think in which they have been very comfortable, and they started getting more orders. I would believe that I think most of that is factored into the price for sure. I think many of the IT companies, the valuations definitely stay at an elevated level or higher level. And in such situation, I think one would not like to buy afresh, I think, into the most of the IT companies, though fully believing that I think the bottom line performance would be much smarter compared to the top line performance for the reason of rupee depreciation, which we spoke about.
What is your take on Yes Bank, IndusInd Bank, Federal Bank, Uruviyasa Bank, essentially the private banking space and banks which are dependent on the wholesale end of the market? Today these banks will be off to a good start. Would you be advising your clients to use today's strength to their advantage to cash out of some of these private banks?
I think leave aside the gap up opening for these particular banks because I think that could be very unnatural. Though we believe that I think most of the private sector banks names which you have spelled out, I think their cost of borrowing would come down, I think at least by 30 to 40 bips, even for a company like Yes Bank. I think, and that could easily translate to around 7% gain onto the bottom line. Of course, this is all with a lag effect. It's not going to happen immediately. But the fact is that I think this is where the market may probably take a cue and would give a re-rating to this kind of stocks. We do believe that I think these banks have got a good strength, definitely for sure. And those negatives which were there in form of I think higher cost of borrowing, if they are going out of the way, then probably I think going forward the business would be more natural and normal for these banks. And then this situation, I think they could become a buy candidate. But as I said at the beginning, I think leave aside today's gap up opening because that could really I think take away the advantage from your hand as far as I think you want to make money out of it. Let market get corrected, probably I think get stabilized and then add into your portfolio. We certainly like I think in a priority order like IndusInd Bank to begin with, followed by Yes Bank, ICICI Bank and Axis Bank. In that order I think we would like to add these stocks in our portfolio given the opportunity at lower levels or corrective markets.
Deven, what about the metals pack? Would you just treat it as a trading rally or is there an investment opportunity there?
Well, I think it depends, I think, where exactly I think you put your money. But I really believe that in the global market with the stability coming back into China, the metal prices are likely to remain more in a disciplined manner. Probably I think we are not going to see too much of volatility into the prices of metal at the same time. Also because the crude oil prices are also remaining under control. Probably even though I think the shutdown of USA has resulted into fall in crude oil prices, but believing that I think they went even I think in a normal range of $105 to $115, then in such situation I think one would probably I think stay long with the metal And within the metal space, I think one would probably, I think, try and buy aluminium to begin with as a first, I think, choice, and then the steel thereafter. I think that could be our way of looking at things. I think we definitely find that Hindalco Sesa Sterlite would be a better choice vis-a-vis Tisco if one has to select, I think, within the domestic market.
Deven, what's your take on industrials? Names like BHEL, L&T, Thermax, Cummins. Do you think these stocks have reached the deep end of the pool and they are unlikely to fall more?
Well, I think many of these companies, I think, would not be giving any improvement in the performance in the coming quarters. I don't think that, I think, the performance is going to change beyond a point at this point of time. However, the news flow would. Basically, what we believe is that I think most of these capital goods companies, BHEL for that matter, which you mentioned, even Crompton for that matter, I think you would probably find higher amount of order inflow coming in this 6 months. Given the fact that many of the projects have got the clearance, and given the fact that I think the second half of this financial year, we are likely to see more traction on the execution of infrastructure projects, I think the power sector particularly would come into force once again, and that's where I think the likes of BHEL and Crompton would be meaningfully placed. So certainly I think one will have to be selective and add them into portfolio. We currently prefer to buy into the portfolio the Crompton to begin with, and BHEL, of course, I think it has already moved up, but I think in any corrective market or any corrective situation, I think one could add BHEL as well. Crompton and BHEL would be two clear choice for us.
Deven, what is it that you're liking from the media pack? We've seen good amount of trading rallies off late in the likes of a Z, or for that matter Sun TV as well.
Well, I think there are two things which are fundamentally changing for them. Given the kind of set-top box reach which has already happened in the distribution space, I think the subscriptions part of the revenue is going to increase for most of these companies. To an extent, I think it is discounted into the marketplace. But more importantly, I think the ad revenues are expected to go up from current levels. Given the regulatory changes which are happening in this space, I think the ad revenues are likely to go up going forward for most of these companies. At the same time, I think this particular period is going to be a busy period for many of the channel businesses, more because of the election coming in the first half of 2014. So from that perspective also, I think one would probably find that higher amount of ad revenue inflow, I think, coming into these media companies. And that's where you are seeing some amount of re-rating or good amount of re-rating taking place. Certainly, I think the choice number one would be Z. Sun TV has already done good. I think it has already moved up. But Z and TV18 would be from the listed space. I think would be two clear choices that we would pick up and add them into portfolio.